13F season. 13Fs are just with the SEC, all hedge fund managers managing. I'm pretty sure it's over $100 million in assets, which is pretty much the ones you really care about the most. The big asset managers have to disclose their holdings, their buys or sells, stocks they added to, and they do it about 2 weeks. They release this stuff after earnings season around, but they all release it kind of at the same time. There's a lot of different places you could find this information. For me, I love to break this down because some people do a little bit of research on it. For example, how did you know that Buffett bought Barrick, right? Barrick Gold. It was everywhere. He bought it. So funny because, I knew it probably a half a second after this news was publicly released, right? And it's funny, like two weeks later, I had people in mining industry, did you see that Buffett bought? I'm like, yes, I cover everything, not just mining stocks, but it's funny how a lot of my friends in the gold industry, mining industry, did you see that? Yeah, we saw it. We know. But, people looking at Buffett saying he's buying Barrick. Well, they're using it, and from what I'm hearing too, even from a lot of gold bugs, believe it's a sign America's going to do bad. We're going to see crazy inflation, and it's a store of value because he hated gold for such a long time, right? And didn't see the value in gold. Buffett is buying Barrick not as anything else with the U.S. It's alternative currency. He's buying Barrick because Barrick and Newmont, you're looking at as well, these large cap gold companies are like technology stocks when it comes to margins, when it comes to profits. These companies are growing 44% growth year over year. You're looking at debt for Barrick came down from $3.4 billion to $1.4 billion, and they have another, what is it, $3 billion or so on the balance sheet. It's incredible where the all-in cost, the all-in sustaining cost, which is the number you should care about the most, right? How much it totally costs for them to produce an ounce is $1,000. Well, when gold is $1,500, those margins are good. When they start going up, they explode. I mean, everyone thinks gold's going over $2,000. So sitting on a massive cash hoard. That's why they're going to go out and buy so many junior miners who have the best assets, right? Have been so undervalued. That's why you've seen that market take off. But Buffett's a fundamental analyst. That's what, and again, you can say, well, his guys bought it. But I'm sure they have to go by Buffett, considering that Buffett said that he hates gold stocks for the last 30 years, to say, hey, is it okay if we buy it? I would think so. Because he knows Buffett's going to get shit every time he's on TV for this and say, hey, you didn't like it. Why do you like it now? Like they do the airlines. But if you look at Barrick and Newmont in the gold industry, I mean, these companies like technology plays. When it comes to margins, they're incredible. They're like software companies. That's why. I mean, you could say whatever you want. I mean, if you really thought America's going to end, the dollar's going to, whatever, he wouldn't be long anything, and he's still long everything, other than a couple of things. And he did sell a big position at Wells Fargo. It's been legacy holding for a long time. But some of the things that caught my attention, I wasn't joking. I wasn't playing up this segment like surprises. I have Third Point down low, one of the greatest investors out there, buying JD and Alibaba. That was kind of surprising to me. These are companies that are going to be listing in Hong Kong and listed in Hong Kong, just the U.S. is fighting. You would think that, to buy them right now is just very interesting. Maybe it's more of a play where if the Democrats win, right, because Trump's pretty much been all over China, and there's a lot of friction there. And maybe they feel like that's going to ease. I know that the polls mean nothing, guys, but the polls are getting, closer and closer, right? That margin's getting closer. But still, you're looking at Democrats predicted to win, Biden's predicted to win. Maybe that's the play. He had a ton of Disney, which I think makes sense. It's something I've been wrong on. But hey, if people want to pay up for this company at this level, when I've broken down the fundamentals for you, and they are horrible. I mean, this is a company that's every division's impacted. Sales down 40%. The only thing that did good is, well, they say that did good, is they're signing up more people to Disney Plus, but the more people they sign up, the more money they lose. It's a huge money drainer, which they don't have. They paid a fortune for this. By the way, Fox sold them those assets for, what was it? $70, $80 billion, whatever. What a great sale, man. Holy cow, Fox Entertainment assets, great job by them selling right at the top. But they took on more debt than they've ever taken, but nobody cares. But I could say if people are comfortable buying Disney now, what do you think Disney's going to be 6 to 8 months from now, where COVID numbers are all getting better across the board, death rates are going down? You're looking at all the numbers. I've covered this. Go to my Twitter account at Frank Curzio. I have lots of charts, do live videos. All this stuff's coming down. I mean, it's getting better across the board. I mean, the death rate's pushing at 3%. It was at 8% at one time of the people who get infected. A fatality rate. You look at numbers coming down tremendously across the U.S., even though more people are getting tested. And we know that this impacts a certain group of people under 50. Hardly anyone dies from COVID under 50. Just look at statistics again, CDC, it's all there. But yeah, some interesting stuff there, like Disney. You have Tryon Peltz selling GE and significantly. He's taking a big loss. He's held that stock for a very, very long time. But just interesting to see him selling it now. I would think that GE would do good or better going forward as the economy gets better, more people buying planes, healthcare division. I would think from this point, I'm just surprised if you held on this long during everything else. I'm just surprised that, you'd be selling here with, there's more optimism around COVID. I'm not even talking about if we get a vaccine, but if you figure 6 to 9 months, I think GE the division would start picking up. David Einhorn, Greenlight Capital, has been doing great lately. Okay, everyone talks about, and I was quick to mention too, because it was a good 5-6 year stretch where it was terrible. But he's doing much better now. He also bought GDX, another big name going into gold, 1.8 million shares. Looking at Stanley Druckenmiller, Duquesne Capital, buying Carnival Cruise, new position, 2.8 million shares. Surprise. Not such a surprise. It's not such a surprise if you are a Curzio Venture Opportunity subscriber. Plus, it's not a surprise if you listen to the past 2 podcasts, how I said small caps are going to explode if the Fed puts in yield curve control, which they've only done one time in the history of America, 1942. Just did a big presentation on it for the Money Show, live virtual thing. We'll send it to you if you want to see it. I don't know if you want to see me. A lot of stuff I've said on my podcast. But once they do this and they put a fixed rate. YCC's yield curve control. So when a central bank sets a specific target for interest rates, that's what they do. It's a yield target. But then what they do is they commit to buying whatever amount of government securities are needed to maintain this target. Now, how is that different from what they're doing now? Right now, the Fed fixes the amount of monthly purchases under a regular program, right, which is called, you guys know it as quantitative easing. This is different because they've only done this once, 1942, World War II. So the Fed capped yields at 2.5% to help the Treasury basically fund debt in World War II. And if you look at what happened over the next 10-year period, holy cow. If you're looking at asset prices, the price of homes surged. Again, what this does is it shows that the Fed is committed to low rates very long term. And the market is a forward-looking vehicle. And this takes a lot of risk off the table. And what happens when you take risk off the table? The riskiest of assets explode. They go higher and higher and higher. That's why you're seeing Stanley Druckenmiller buy Carnival Cruise. That's why you're seeing Value Act. I'm going to say it again because they just bought 11 million shares of Nikola. I don't know if that's incredible. You're a value company buying Nikola, and he bought it last quarter. He's probably doing well. It sucks up. And EV play, they say, could be the next Tesla. Again, it's generating whatever it is. I don't know what the market cap is. How many several billions of dollars of market cap, and they're generating like $100,000 in sales or something like that. Value Act. So you're seeing that across the board. David Tepper, one of my favorite to follow, someone I admire very, very much, who's ahead of the markets. He took a big position at AT&T, 9 million shares, new position. It makes sense. Market's coming back. The economy coming back. AT&T has leverage to the consumer, which they switched the whole entire business over, and streaming, HBO, and plus it pays a nice yield that's perfectly safe. I've covered that numerous times. People want to say, it's $200 billion in debt, the most debt of any. They generate $30 billion in free cash flow from everybody paying their bills every single month, right? It's just monthly recurring revenue. That's why you're seeing some of these companies, even the cable companies, once you have that recurring revenue, it's why Disney switched its whole business model around because they don't really have that recurring revenue model. Now they're trying to do that by building up their streaming business because all these other companies have that revenue coming in constantly, every month, and charge advertising and tracking everybody and all that stuff. You make a fortune. But buying AT&T, he also bought 1.2 million shares of Disney. Again, I was wrong on Disney, but if people really believe that Disney's in a good position now, they're going to be in a much, much better position 6 months from now. As these parks start increasing that capacity, more people are dying to get out of their homes, man. Holy shit, they're dying. And he added 5 million shares to another stock that I think is garbage. Well, maybe not so much garbage, but Goodyear, right? You see more cars being sold, but still added five. He added up to 5 million. So I think he added about 1.7 million. Now it's a 5 million share position a good year. So when I look at 13Fs, guys, this is what you want to pay attention. I probably just share like 20, 30 stocks. The trends that I saw is a lot of these guys are taking on more risk. They're getting rid of their legacy positions that are shitty, like Wells Fargo with Buffett, like Trian Peltz with GE. And they're getting more aggressive, much more aggressive. Some of them are also buying those high-yielding stocks with good underlying business models. But the Carnival Cruises, the Nicholas, I'm seeing a lot of plays being bought here that are, considerably risky, because if you're looking at the conditions in the market right now, I don't think I've ever seen anything more favorable. I know it sounds crazy to you guys. Again, when the facts change, you need to change. I've been bullish for the last 2 months. Before that, I was really worried. Didn't expect the government to spend as much as they spent, and they're not stopping. But if you're looking at this market, guys, this is why it's important. Why it makes sense to own risky assets, some of the most risky assets, because the risky assets and the risky stocks outperform when you have a bull market. But look at Target, 25% increase in sales for a mega stock like that. Makes sense. Also, Walmart blew out the numbers as well, right? You close every other store and you leave those open, that's what's going to happen. But hey, you're seeing that on a consumer level. Super low interest rates are here. Plus, chances are we're going to get yield curve control, which is going to keep it low for a very, very long time. You're looking at home starts and permits. Did you see those numbers? Do you see home prices? COVID numbers getting better across the board. And if you're looking from a technical perspective, we finally just broke out to new highs. If you look historically, when you break through those highs, it's one of the best times to buy the markets. And that's dating back to S&P 500 when it became 500 companies in the 50s. So you're looking at this going, well, it's okay to be nervous. That's cool. Be nervous, be skeptical. That's why we use stops. But if you're looking at the conditions of the market, where you're looking at low interest rates, and the biggest point here, guys, which you need to understand, is why that we're selling Curzio Venture Opportunities at a dirt cheap price, because it's one of the greatest opportunities I see to buy risky assets in a long time. Because when you're looking at the Fed, they're going to have to continue to spend trillions into the market, put trillions into the market, because the difference between Main Street, that gap between Main Street and Wall Street owning assets is going to continue to take off with low interest rates. But there's still a lot of businesses that aren't open, and Main Street is struggling. It puts the Fed in a position that they have to continue to fund these markets and fund these companies that aren't doing that good. Provide more loans, keep interest rates low. And what's going to happen when COVID goes away, which it will? It might take a year, or people feel more confident. People feel more confident going out now. What's going to happen? Because now you have a market that's going to go back to normal pre-COVID levels, except you just injected $7 trillion so far, and trillions more are coming. And it's going to continue to come. What do you think is going to happen? You see the dollar come down, yield curve control come in. This way they make sure those rates are going to stay low for a while, because that's their biggest fear. That's the biggest risk of rates rising with so much debt in the balance sheet. And you got the Fed. It's a perfect environment right now for assets. That's why you're seeing them explode. I never thought I'd see conditions like this where markets are at all-time highs and the Fed is throwing trillions at it. Nobody ever predicted that, but they're doing it. You can get pissed. I say this all the time. Hold up a sign, do whatever you want, but you got to buy stocks and buy risky assets, because they significantly have been underperforming the major indices. Significantly, which never really happens when you see bull markets. Small caps significantly outperform on the way up and significantly underperform on the way down. That's where the markets are. This bull market that we've seen since March, going all the way to highs, the Nasdaq's still down on the year. I mean, some of the performing technology stocks were about 30%. It's a great opportunity to buy risky assets. And that's what our CVO product offering at one of the biggest discounts we ever did, which you could find that at Curzio Research on our website.